What's up, everybody? How are you guys doing? I'm Justin. This is the Ivy League live stream. What is going on here? Good evening. How are you? Thank you guys for joining us. Let me make sure that the sound works. We had some issues last night. Good evening. Oh, yep, we're good. We Gucci. How are you guys doing? Thank you guys for joining us. I'm Justin. This is the Ivy League live stream where we are going to cover the stock market. We're going to cover trades of the day. We're going to cover lessons. Okay. We're going to take questions, tickers. We're going to run through charts. We're going to get into CPI. We're going to get into PPI. We're going to get into, do we think the markets even care about CPI? All right. Could we have a somewhat non-event tomorrow? I mean, I don't think it'll be a non-event because it's definitely an event, but I just think that the volatility may happen pre-market, and then it might be a little overblown with excitement unless we get a surprise. So again, welcome. If you're new, like, share, subscribe. I would greatly appreciate it. It's just me. I put all this together. It's a lot, let alone outside of here. Okay. So we thank you for that. If you do find this information valuable, let us know. Give us some feedback, what I could do better on the streams. If you don't know, we stream live Monday through Friday, 7:30 to 4 p.m. Earnings, whatever is going on, we'll stay after. We'll cover earnings calls so we can get a good game plan and a good insight on what the companies are going. And it's more about not what the company itself is doing, but more about reading the tea leaves as far as what that sector may be, what's going on with the sector, what future guidance, just insight from CEOs and what they're seeing, what they're doing, what are they doing behind the scenes are they are they tightening up the belt where they're not spending any money for innovation, this, that, the third. I want to get into also, I want you guys to, again, before we get started, we'll get a couple people going here. Guys, throw in some questions, especially if you're new. If you're not, I know I just started this channel not too long ago. So if you have any trouble on understanding whatever it is that I'm talking about, throw it in the chat. I tried to be mindful when I do go about these streams that there may not be somebody that, that knows what I'm talking about. There may be somebody that doesn't know what I'm talking about. And if that's the case, it's okay. You're here. You're trying to better yourself. All right. That's why we're all here. We're all trying to better ourselves. More importantly, it's probably not about ourselves. It's more about our family and our future for them. Whether you have kids, you want to help for college education, a hobby, whatever it is. All right. Just because you have a full-time job does not mean that when you're a swing trader or taking trades, you're still a full-time trader. If you're trading the markets and you got your nose in the markets every day, it can change your life. The markets can, and if you put in the work and you do the things that are needed correctly, give it time, all right, it can and will change your life. Changing your life may be the wrong word, but, there's people out there who have been able to not only have down payments on their homes, they've been able to pay their homes off. Like, it's just, the market provides wealth, okay, if you are in the markets for the right reasons. If you're YOLOing your account on a weekly moving average, on a weekly option, chances are you're not going to have the best luck, because the truth is, if you don't manage your risk, you can have 2, 3, 4 nice trades and you're still just throwing your whole account at it. One trade's going to knock you out, and then you're going to get depressed, and then you're not going to eat. And then there's that side of it. You don't want to be that guy. Remember my face, remember me telling you this. Don't be that guy. Do what's needed to succeed, guys. We want to help give you some guidance on this live stream. That's what we're here for. We're here to have a place to come trade. All right. Ultimately, that's what this is. All right. I'm going to have a couple people come join us. Who that is, I don't know yet. I do have one person in mind. All right. But I still would like to have 2, 3 more people. All right. So we're growing. We're a new business. If you give us a like, we're trying to get to 100 subscribers. That is my goal. We'll see if we can get there. You just set the bar. Just set the bar. That's all you got. You don't have to set the bar way up here. Oh, I want $1 million subscribers. Or I want $1 million. You can get $1 million, but just take your time. There's a roadmap for everything, and some things take time. And a lot of people forget that. They want this instant gratification. That's not why we're here. All right, we're not here for instant gratification. So if you're new, or even if you've been trading for a while, tell them in the chat, it just takes time and it takes an education. It takes work, okay? And it depends on how you want to go about it. It can take up a lot of your time. There's a lot of information you can go over, a lot of charting, a lot of different data to read over, okay? And then coming up with your own game plans, and it can be a lot. And I need you to remember, you have to manage your risk. And one of the lessons I'm going to get into today is 2 trades that I took today. I had a small green day. It was about break even, just a little over break even day. I was not swinging for the fences, or the things that I were looking at today didn't, they kind of went past my levels, and I just didn't trade on my, the SPY was kind of sitting sideways, and I'm like, I said this morning, let's see how we close. The afternoon close is what's going to tell us. I said, could we see sellers move to the side and just have like a slow grind up in anticipation for a decent number? You actually had the market. So what I was thinking was, maybe we had hedging, some type of positioning that would happen between with the indexes. And the indexes have moved a lot the past month. Like it's a lot of data. There's a lot of things going on at this time, but usually they'll make these big moves and then consolidate for a little while. And then you'll get a big move out of nowhere. You can track. There are things that you can track, and I can show you guys what I use to help track. How do I know if it's going to be a momentum day or a sideways day? All right, there's things that I use that can help tell me. So I was just in the wrong sector today, The small caps out of nowhere just took off. I'm going to say mid caps, your Airbnbs, your roadblocks, what else? Snapchat. So you today, if you noticed any of those stocks, that's institutional ownership just biting and nibbling, putting on positions that take them a little while, on these mid-cap technology names, these innovative names, okay? They are at the lows. Maybe that's where they find opportunity, and maybe they think that they can get their 20%, 30, 40%, maybe 12%. Maybe they see something long-term. But it was like that whole group of mid-cap technology stocks that were going today. We'll go over a few of them. You had Coinbase, you had Roadblocks, you had Airbnb, you had, Redfin. There was just a lot. There was a lot, guys. Thanks for joining us. Let's get into it. Again, if you guys have any questions, you guys have any tickers, any stocks you want to go over, we can throw them in the chat. What's the first thing we're going to touch on? Let's touch right now on CPI. So what are our thoughts about CPI? All right. First thing we know about CPI is that the market doesn't use, or the Fed does not use CPI. The Fed uses PCE. All right, so if we know the Fed uses PCE, we want to see, let me type this in real quick. So tomorrow, I had said last Fed meeting with the polls that we had that I thought it was a really high likelihood that we get, no matter what. I'm not going to say no matter what, because that could run deep, if you know what I mean. You could have a bunch of banks that just, even with the Fed backstop, you could just have anything happen where that Fed funds rate can dwindle down. Now look here, guys. This is for, if you don't know this. So what July is pricing in, okay, this 91.8% chance that we get 25 basis points, which is, I'm pretty sure, going to put us at 5, okay? Or we'll be at 5.25, I'm pretty sure. I can't remember. I have to look. Yeah, right here, guys. Yeah, 5.25, okay? This is telling you that we're going to get our 25 basis points because we're at 5% right now. Fed funds rate, 5%. You want to watch these. Now, what's been interesting is the fact that the 2-year rates have been rising, the 2 year has been rising, and stocks have been rising with it. There's always a something to follow. The first of the year, dating back to December, pull up a 4-hour chart, an hourly chart if you can. Look at Bitcoin and look at the Qs. Look at Bitcoin, look at the SPY. The late December, literally like Christmas, a little bit after Christmas, into January, February, and into March, they were literally trading together. Well, Bitcoin was like a day ahead. It was a day ahead of the overall market. I'm not gonna say the overall market. I'm just gonna say like the S&P and technology, like the Qs and the triple Qs and the SPY specifically. You can pull it up on TradingView and you can look and you'll see, just pull up the date and then look at where the Qs is and maybe if you can use an hourly. Sorry. So there's always something that's kind of like what it was the dollar there for a little while. I've even used, like, not too long ago, I used the IWM. I just noticed that it was doing the same thing, but it was ahead of it. Because what you'll have is you'll have like the NASDAQ as the leader, and then you'll have the IWM or the Dow lagging, and there'll be that effect. They'll kind of do the same thing, but it's kind of like arbitrage. The Qs are doing, doesn't mean it happens, but if you find it from time to time, you'll be able to put on trades based on another ETF or something else in the markets, and it will follow it, but it'll be just delayed. So with that said, we want to look tomorrow if this Fed funds rate for September and even November goes up or if it comes down. Why would it come down? You could have a way better than expected CPI number. So I got my months mixed up. We could get, I was in the camp that we could have a surprise. All right. And then I'm like, wait, I'm a month ahead. I'm saying, putting my neck out there. I'm just putting myself out there. And I'm saying I think July could be the surprise. I was just off for some reason. It's doing a lot, and I wasn't realizing what I was saying. So I'm expecting a surprise somewhere along the lines. Nothing crazy. All right. Now the market, why do I say the market may not care? The market may not care because if you remember last year, the economists could not get the data right at all on their estimates. They were nowhere near close. They would go up, it was down, they would go down, and it would shoot. We would just get a crazy high print. Okay. I think the market knows the estimates, or the economists are getting these estimates right. All right. They're getting the estimates right. So therefore, there shouldn't be that much of a surprise. So we've rallied. We're sitting up here now, the S&Ps, and we're putting in a base. Or we have been putting in a base. This is a 15-minute chart of the SPY. All right, let me zoom out. So you see this base here? This is our low. This is our high. So far, until this breaks, we're sellers up here. When we get down here, we're buyers. Here, you're in the middle. That's completely up to you, what you do there. Don't do anything. I don't know. It's up to you. I would suggest just know, and we're going to go over them, know your levels. Know what's a strong level and what's like just a minor level that it may or may not pay attention to. That, maybe as it rallies, it goes through it and it just pulls back a little bit, holds it, and then continues on. All right. We have a lot of selling here. If you guys take a notice on the S&Ps, okay, this is a 15-minute chart. And I've brought this up before. You have multiple things going on here. If I take pre-market off, you have an island reversal to the upside. You have an island reversal to the downside. Okay. You have a cup and handle with light volume on the pullback, but it's just like this. This is what I didn't like. This selling right here. That's not what you don't want to see. Heavy selling on the handle. You don't. You want to see heavy green volume on the way up, and then on the consolidation down, you want light selling volume. Okay, whether that's the daily, the weekly, 15-minute, it doesn't matter. Okay, your volume is key when putting in patterns. The volume gives you another thesis like, hey, what you're seeing is correct. The pattern it's putting in, the probability of this going up when it finds support in this area as a cup and handle with a light volume sell-off is pretty it's great. You know, you have a high probability. What else do we have? We have a left shoulder, head, right shoulder. Okay, and what do we have? This is your neckline. We came back to test the neckline. Looks like we're putting in a double bottom and we've rallied. Everybody said we're supposed to come down. We're just now getting up to this island reversal that's here. And we're starting to reject it. This was the target. I came on this morning, guys. If you don't know, we're live Monday through Friday, 7:30 to 4. Okay. I was looking for this level to get reached. Now, I thought it would do it in a different manner. Okay, but with the market doing what it did, I was right in the sense that I said, guys, watch for the close. Let's see if it just closes higher. Now, I thought throughout the day maybe the sellers would step away and let them just buy it up in case and price in a better than expected number. And then worst case, you get a bad number, they sell it off. They can sell it at a better price and get short. You know, So that didn't happen. But what did happen was just a small rally to the upside, nothing crazy. And I was just wondering if we could see hedging, positioning, like leading into the number, because we usually do. Now the market knows PCE is what the Fed watches. With this being like just somewhat it made a move. Now volatility is down. We're in the mix of what seems to be volatility getting killed out of a bear market. That's usually signs of a bull market. Things can change. All right. If you go back to any bull market, you'll usually have two stages. Don't always have to have one. You'll usually have the low put in after a peak in the 2-year. We have had the low in October and we just peaked in the 2-year. So that's different. Okay. I don't know if we make new lows. I know that if we're going to make new lows, it's going to be something pretty damn bad. I assure you that. To go from you're talking from 450, 440. Now you're talking 100 points in the SPY to make new lows because we tested 350. This is the kind of market analysis that people need to start thinking about. So if you hear somebody talking about doomsday, which I don't think I've heard too much. Of course, I've been working and doing my own thing. But if they're telling you the market's going to crash and this and that, where's it going to go? Now, I think we get a pullback eventually into the first, second quarter of next year, roughly. Even that might be a stretch because of all the liquidity from the government and the labor. Things just may take even more time than we think. Do we kind of get up to the top, roll over? I don't know. Nobody knows. All we do know is that I have a 15-minute chart here, but at the end of the day, they've been selling the heck out of this stuff, guys. All right. Look at this volume to the sell side, guys. There's not one green bar up here other than today. So, CPI. Does the market come in? Does the market care if it comes in 0.1 up or down, above or below the number? Let's say, like the estimates, I got them right here. Month over month for inflation itself. Month over month is 0.2. 0.3 is the forecast. 0.3 is the forecast. That is very low. Now, core inflation is at 0.3. You're almost at your 2% target. All right. Inflation rate year over year is 3.2%, and the core year over year is 5%. Okay. Now, let's say what I'm getting at is let's just take year over year inflation rate, 3.2. What if we come in at 3.3, 3.4, or 3.1? Okay, does the market not care? Okay, we know inflation's been coming down at a rate of 2% or more since October. The economists have been getting the data right. That's what brought us the volatility in the first place last year, is because these numbers that were the estimates were not correct. They were nowhere near what the data was showing. Now the market is leaning on these economists saying that they're getting the data right. We kind of know where we're at with things. But do we get a surprise? Do we get a surprise next month? That's what we got to watch for. We still have the jobs data. We still have a lot of things that are coming. So if tomorrow isn't that big of a deal, don't fall asleep at the wheel, because I'm assure you Thursday and Friday, we're going to get a move to end this week. They came back from break, and I assure you, you saw a little bit of it today in the technology mid caps. Look at the buying that went on there, guys. So what this also on the second note is telling me we're starting to get a healthy market. What's a healthy market? A healthy market is, what did we have first? We had big cap tech. All the biggest companies in the world led. Okay, what did you have during that? You had healthcare pullback. You have the IWM still sitting down at lows. All right. Some of the Dow stocks, it's 50-50 there, depending on especially what sector. But more importantly, like what was bought up today, like mid-cap technology, maybe like biotechs and stuff. Now, biotechs, interest rates do not help them at all because they're cash intensive. Again, if we get this secular, so you have, let's just picture this. You have big cap tech up here. You have your NVIDIAs, your MDs, your Microsofts, your Googles. And Google's not up there, but, Apple and Microsoft, they're at highs. You have the whole market down here. There's a big gap. What is going to hold them up? Now we need the rest of the market to follow behind them. They're the leaders. Now we need the laggards to start catching up. Is that what we're seeing? That is a healthy bull market, guys. That is the truth. That is what nobody's telling you. And you saw it today. You saw the amount of volume that came in on those names to follow behind them. So do we look to see if we get a day 2 continuation or a month or two type of rally? I'm not talking something crazy, but don't shy away from looking at those names. You're going to get a pullback. Some of them pulled back. You could look at like Square, for instance. Okay, look at Square today, guys. It's been on a rally. Let's go to Roblox, RBLX. Okay, because I know that one rallied. Snap rallied. Look at this volume, guys. This is a 15-minute chart. Look at this volume. I mean, you've cleared this base. This is what? Left shoulder, head, right shoulder? How did we miss that? What am I going to do at Roblox? Look at this. We just got our first trade idea. You know what I'm going to do? I'm going to look for roadblocks to pull back in right here. Right there, and I'm a buyer. I'm setting my target, and I'm gonna not forget this one, because this is a really nice setup if I'm seeing it correctly. Let me pan it out a little bit further. That could actually be your neckline. That right there could actually be the neckline. So I'm gonna actually put this level as well. We'll get into the thick of it real quick. Let me see here. Oh, I have the circle up. So do you see what I'm getting at though, guys? And I wanted to go through charts too. So what I'm saying is you're starting to see the rest of the market catch up. If the rest of the market can catch up, watch out. We're going to test all-time highs by the end of the year. All right. Do we roll back over and put in a double top? Yeah, we could. But I do know mega cap led, now small cap technology, mid cap technology is catching a bid from institutional ownership, and let's see if it starts to go to match up with big cap tech. And then what's next? What trails behind it? Because what I'm trying to get at is, in order to have a healthy market, what you need is the leaders, the laggards of those sectors. We had big cap technology, now you have mid cap technology. Okay, and you want to start seeing all of them. You've had JP Morgan, the big banks, start to lead. Okay, they're starting to go up, and then you want the smaller names to start going up with it. So the whole market moves up as a whole. That is a healthy market. That's all I'm saying. All right, so just keep that in mind if you can understand if you guys have any issue, like if you're not understanding what I'm getting at, throw it in the chat. Just let me know that you're not fully understanding. Even as I go on through this live stream, let me know if there's something that you're not, grasping, or if I say something you don't know what it means. But this here, guys, is a really nice bullish chart, and I am going to be looking to get long again roadblocks eventually. Left shoulder, head, right shoulder. This is a beautiful base. It has not broken down. Look at the buying. It's a little iffy there. But look right there, guys. You see that? Look at them buying the dip. Look at that. Look at that volume right here. All day, decent volume. All day, decent volume. So they've been nibbling, and today they were just getting ahead of it. So, and if you look at the daily, a lot of these look like this. They're all at lows. You see that? They're all down at lows, but they're just putting in bases. They're not selling off. So, that's an idea that I just jotted down. I'm pretty sure I wrote it down. I know I want to have Roblox on watch. I'm going to have to go to another page. And if you guys have any tickers, throw them in the chat. If you guys are new, welcome. If there's any questions you have for me, again, I've been trading for about 6-7 years. I've been doing this for quite a while. I have a really good understanding. The reason I can come on here, I'm not somebody who tries to force something. Now, if I don't know anything about the markets, or if I'm like mediocre, all right, I wouldn't be on here and try to embarrass myself. I feel I can give you an upper hand, and just having that guidance, and like having someone else to talk to, because again, we go live, we have chat, we have a lot of good traders in chat during the day, 7:30 to 4. It's on this channel, Ivy League Trading. To be able to give you reasonable reasons, whether it's trading, whether it's learning to read level 2, time and sales, which is reading the tape, being able to come up with theses, I guess, if that's a word, on market direction, the environment. All right, so I just came across a lot. Now, I wanted to do this last year. It's not that I wanted to, but I was going to do this a while ago, and I just never did. And there was just so much that I did, and I said, what, I'm going to go on here and see if we can't help some people out. People charge a lot of money to just go have a place to go to just go over charts. People pay thousands of dollars just to hang out and go over charts and get trade ideas. So we're making this for people that don't have the extra income, especially in the environment we're getting ready to go into. All right. It shouldn't cost you the amount of money that they charge just to get an education on technical analysis, and having being able to learn like what you should be doing and not doing through the markets, but what you should be doing and not doing in different market cycles, as far as like interest rates. Where do you want to be when interest rates loosen? Okay. And you want to know these things beforehand, because you can catch a let's just use biotech. All right. I'm pretty sure. Look at this, guys. Look at this short. Why was this? This was up $184. That's an $80 short. Now we could find more. This is again just the ETF. All right. Did the SPY go down $100? Let's see. Did the Qs go down $100? I'm not sure, but I do know, even going into this, that biotech companies get hit in high interest rates. They are capital intensive. It takes a lot of capitals to get a lot of the research and medicine that they want to do and get it out. Get the FDA approvals if they need it, then get it into manufacturing, getting the materials, getting all the research together. That's going to hurt a lot of them with higher interest rates, guys, especially if they run out of money and don't borrow money at long-term rates. Maybe they got it at a short-term rate just because it was cheaper and they've ran through it. Now they need more cash. Okay, so you want to know these things prior to the market's cycles. All right. So what I'm going to do, we talked about CPI. Did I get into CPI? Let's make sure. So CPI tomorrow. What do I think? So now I take back me saying that I was thinking we might get a surprise tomorrow. I'm not sure. We still could. Anything can happen. All right. But I think the July meeting is the reading that I want to see, or the June reading. It's the June reading. We're getting June now. It'll be next month where I think it could come in a little high, because if you guys remember, last summer we got a high like 8%. It was 7.88%, and it was around June, July, right? and then we had the following month it came in a little lighter, and then it was what, August, September. Okay, so it was either the June or July. We had a month where it cooled off just a hair. It was still high, and then we got our peak. We got our peak inflation. It was like August or September. I could go back and look. Here is another thing that I do not want to forget while I have it up, guys. What could also be fueling this rally? All right. I'm having a brain fart right now, guys. Oh man, what is it? So what I'm trying to look for is what is it? What is it? What is it called? So what I'm looking for is a Fed's. I want to say Fed's balance sheet, but um, it wasn't coming up. Okay, there we go. There it is. I was like, if it's not the Fed's balance sheet, then what is it? Look at the rise that we did have. We're still up here, guys. We are still up here, and this balance sheet is still kicking high, guys. They haven't done anything with it. Let me see if I can pan this out. There we go. Look at that, guys. It's still quite a ways up. Quite a ways up. Give me 1 second. I have to use the restroom. So this is what I think is going to help fuel the rally. But and at what do they start selling? That's another thing. They haven't been selling. They've been letting them roll off. So what is it? You guys got to think about that. What's going to help us get to the downside if we're going to have it? So I have a thesis of these mid-cap companies, small cap companies in particular, that don't make any money, let alone make enough money to have a paycheck, to be able to pay payroll and this and that. And of course they do. So they don't. Some of these companies don't make any money, and they've went on and borrowed money to be able to pay for the warehouse, pay whatever. You know, they use money to start the business, to put money to work, to buy vehicles or whatever it is. Whatever it is they do. To buy a factory, the workers, whatever. You could start to see some of those companies, if they do not sell their items of goods or whatever it is that they do, you could see them start to have trouble and run out of cash. Okay? So that's what I was doing. Let me run to the restroom real quick, and I'm going to get back on that. And then I'm running in the charts, guys. 1 second. What's up, bro? Sorry, my mic wasn't on. Great job today, bro. Great job. If you guys could like, share, subscribe, send this to somebody that you think might be in the markets. that might want to use this, could use some of this information. I'm going to go right now. I'm going to go over the 2 trades I made. If I know, I think one of them was Amazon, and I think the other was AMD. I had to pull up my brokerage, but I'm pretty sure that's what they were. Now at times I'll have 1, 2. I could have 3 trades going on, but usually I usually will have maybe 2 trades. Depends on the market. Like we were in a bear market just a little bit ago. Not that I think we're in a bull market, but we are rallying. So I will usually, short stocks that are weak or sectors that are weak and match it up with longs. All right. A lot of people don't hedge, and I think, if you have the skill set and if you're experienced, that's the word I'm going to use. If you're experienced enough, it's a good way to capitalize on both movements, or, say the market's going up, that one that's been strong, it's really going, you cut the loser because it starts to turn around, or, market's pulling back. So what I'm going to do is we're going to bring up the SPY, and I'm going to bring up a 3-minute chart. First trade of the day was Amazon. We have a handful of stocks we were looking at. All right, I honestly had no idea about some of these mid-cap companies that were going to rally. There were some that had a price upgrade, like Nvidia. Uber's CEO was leaving. Not the CEO, but one of the managers wants to go on and move on to another company. And look at the day Uber had. It's not because of him. It was just the sector of these stocks rallied their what off, guys. Now, does this look like roadblocks at all? No, not necessarily. But man, look at this. This is what I like, and I tell people, a rally. I probably could pan this out a little bit more. Man, is Uber almost at all-time highs? Are you kidding me? Wow. You go, Uber. You go. Uber's makes pretty good money. A lot of people may not know this, but they pull in some change. I don't know how long this lasts, though. So, do we see Uber 20 years down the road still doing what they're doing? Maybe. Maybe we do. So what you'll tend to see is what we call a rally, puts in a base, and then you get the shakeout. Rally, puts in a base. Here's your, somewhat of a shakeout, and then look, boom, 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 boom. That's obviously an earnings. Obviously, this was too long of a shakeout. Usually this base it'll be like this. You have a base. It could last a year. It could last 3 months, 2 months, whatever, and you'll get this sell off, and then boom, only to just make the second leg higher. You'll learn them if you guys are new. If you're not, you probably already know about some of how the market works and some of the stages. So let's go into the trades. So we have this. This is XLK, which is technology, the S&P technology sector. Tell me that ain't a head and shoulders if you ever seen one, guys. We've been talking about this since Friday. We've been talking about it since Friday, guys, since back here. All right, I think we were probably one of the first ones to cover the head and shoulders that was getting put in technology. Maybe we weren't, but I'm pretty sure I haven't heard really anybody talk about it. You have it on Microsoft and stuff, but this is where the real bear is trying to get. It could possibly poke its head out, but we could rally too. Could rally. It's hard to say. Amazon was one of the first trades. All right, what did I do? Amazon Prime is coming up. Okay, I said in chat, let's go to a weekly chart. Okay, we have the 100-day up here. This is one reason you have to look left. All right, and you have to time. Oh my goodness, you guys need to understand. You need to look at time. Why do you have to look up like weekly charts, monthly charts? Listen, institutional ownership uses them. They use monthly charts. They use weekly charts. You had a fund manager on CNBC this morning talking about a monthly chart. So they use these longer term charts because that's what they do. They're buying longer term, and it may take them a month, 2 months just to get into the position. All right. They have a lot of capital. Some of them have a lot of capital, and it takes time to get a full position on and getting it at the prices that they, want, whether it's buying below VWAP, things like that. So look at this weekly chart, and what do we have? Oh my gosh, this mouse is so tricky. So what we have is a 100-day moving average. This is your blue line right here. All right. And what this is telling me is on the weekly chart, we tried to break above it. It clearly got rejected. Literally, the first break above the weekly candle, or above the weekly 100, the 100 weekly, it's so weird to say. So I already know coming into the day that Amazon has a clear resistance of the 100-day on the weekly. All right. Has such a separation from the 9 EMA. All right. That's the yellow line right here. Let's go to a daily. All right. Let's go to the daily. What do we have? We have a flat top resistance. 1, 2, 3, 4, 5, 6, 7. Now 8 tails. All right. I was wanting to get short right here, and I used the daily in real time. And I may change my chart setup, but I like having multiple stocks on my screen so everybody can see. Like what just happened there. I don't know what's going on with me. I'm sorry. So we have kind of a head and shoulders, but not really. This is more of like a flat top base, guys. Like look at all these wicks up here. All right. So what are we? If this is resistance, clearly. So if we know we have all these wicks here, and depending on the volume and the momentum and a few other gauges that we use, we're going to be short, guys. It's hard to get short as a stock's going up, but we want to be short, guys. Right here. This is where we want to be short. Okay. We've broken this level that was, the middleman. So we have support, we have resistance. All right. Stock comes up. Look at the tail. Tail. And it actually breaks down and it tries to peek its head up again. All right. This right here, this was a test of prior resistance. See, resistance. And then it breaks up, and what's it do? It turns this area into now support. All right. I was a little leery going long Amazon. I went long Amazon. It didn't last that long. We had a break up above this level. Now it closed above it right here. You're going to see when I pan it to a 3-minute, 15-minute chart, you're going to see what I'm talking about. So on the daily, I said, hey, if we were pulling back in on the daily, the SPY, I used the SPY or the Qs, but I used the SPY in conjunction with what it is that I'm doing on my trades. So let's go to a 15-minute chart. We don't really have to, but I want you to get the picture of, look at this. Resistance. It cannot get past 130.150. 130.150 is the area that the sellers are stepping in and selling this stock. It's as easy as that. You see that. You see this clear area that it cannot get above for X amount of days. When it gets there, I'm short. Why am I short up there? It's hard as a stock's rallying up. It's hard to get short in front of it because you're like, man, I don't want to front run this. But hey, listen, if chances are you give it the room that it needs and you get short up there and you're watching level 2 and time in sales might show you at 130, you got an 8,000 share order that just popped in. Boom, another 1,000. Boom, 1,500, 2,000. And then the buying is 100, 200, 400. And you're like, wait, now it's being overran by all these sell orders. There's a big sell order up there. That also will help you. If you're not watching time in sales or level 2, it's going to be difficult for you to be short up here. And that's why people are, because they don't watch the tape like they should. They don't see the big orders coming in and selling to help them say, yes, this is still going to be resistance because those sellers still have shares that they want to sell. All right. So we rally. Now, this is why I say trust your levels. And you guys really, if you guys want to do this professionally and the right way, I would suggest you guys just watching the level 2, which is the bid and the ask. All right. and the time in sales, even just watching level 2. All right, because if you watch it, you're going to see at certain areas that it gets to. You could just watch the ask or just watch the bid. It doesn't matter. I would watch the ask. You can watch the bid, but just pick one of them. You don't have to watch both, okay, because it's just a spread. Just watch the ask if you want, and you'll see it gets to a point, whatever, just to make it easier on you. Maybe one day you sit down for 15, 20 minutes in the beginning at at 10 o'clock. 10 o'clock is when you should do it. You'll see on your levels, you'll have your chart. Watch the ask for about 15, 20 minutes a day. If you have time in sales, watch that as well. All right. Maybe do them each on different day. And then the next day, go to the bid, watch the bid. Or maybe you'll get enough time where you can just watch them both now, the bid and the ask, and say, hey, it's going to paint the picture clearly for you. I'm telling you, I read the tape out in the time in sales along with the trade, along with what the SPY was doing. And this stuff that people don't talk about, they don't even tell you this. But guys, it helps you so much to take the trades or take the trades off. I'm telling you, you have to use the level 2 in time in sales. How did I make money on what I consider 2 losing trades? Okay. I was green today on a trades that I got off because of level 2, this, just using all of these things, pretty much the level 2 and the chart, seeing what the SPY's doing, and exiting my trade and saying, you know what, I'm out because this isn't, I just feel it. It's heavy, it's not working, and this is not the sector. This movement isn't today. Should have been in small cap or mid cap technology today, but it was a little too late for that. Let me get a sip of coffee real quick. So let's pull up a 3-minute chart. Okay, 3-minute chart, and what I also can do is pull up the SPY for you. All right, because this is what I used for this trade. All right, in conjunction with the SPY. Sorry, you guys might hear my girl in the background. I'm gonna get through this real quick. It's getting work because I'm spending a lot of time. I don't really get to see them that much or do anything. So we're gonna bring up the SPY. That's why we asked for a like and stuff like that. If you guys could, even if you can just comment and just give us some ideas, some stuff that we can improve on, some stuff you would like to see. So that is a 1-minute chart. Let's go to the 3-minute, guys. You have to trust your levels, but you also, if you're not experienced, you're not going to be able to do what I did. Just if it breaks the level, you're not experienced enough to feel that the stock is not going to hold up to exit, that's okay. Time will get you there. But if you don't have time in the markets, you'll never get to this point. You're going to go through your ups, you're going to go through your downs. All right, this is why I have this trading group here, guys. If you could, pass it along. All right, just share it to Facebook, anything, anywhere. Somebody maybe you don't know, maybe somebody's looking for a place to go over charts and doesn't have a whole bunch of money to be able to just spend a few $1,000s to be in a group to go over charts and trades. All right, what's the SPY doing, guys? So look, off the bell, Amazon's rallying. We come into the resistance. What do I have on my paper? Let's just look. I wrote some down. I have here 128.75 rejection short. Rejection as in we get a rejection, I'm short. I did not go short. All right. 128.75 is right here in this area. I do have a kind of double top, but I don't push it. All right. I don't push it. I can read it. You may not be able to, but the fact is if you were short right here at 428.75 and you gave it a little bit of room, and as soon as you get this candle to break, and well, first off, what you had was a sell-off, okay? You had trouble at this area, and what did Amazon do? Let me bring it over. Let's bring this over. Let's do this right. So, Amazon, 3-minute chart. What does it do off of this level, guys? 1, 2, 3 tries, but during this third candle, it pulls back, and what is this? This is the 9 EMA. You got them both. The yellow 9 EMA is the 9 EMA. The pink line is VWAP. You got both buy orders sitting at and on VWAP and 9 EMA. It literally opened at the 9 EMA and pulled back just a hair because it tested VWAP. And usually I will run this without pre-market, depending on the stock. What do you have here, guys? Look at your pre-market. That was pre-market resistance. That's a double top that just got broken through. So I'm like, let me, it's not even that, because up here I'm like, I can just feel it. I read the tape. I read time and sales. So I may have a little bit more insight on what's going on with the stock than somebody who's just watching the chart. I'm going to tell you right now, the chart's not enough. But I'm seeing the SPY. What's the SPY doing? Again, the SPY's selling off. Not hard, not crazy, but it's definitely looking to go test yesterday's close. It's not going up. Yesterday's close isn't too far away from where it did get bought up from, but I'm saying SPY, pull back, Amazon's up. This stock might be strong. So if the SPY's pulling back and Amazon's going up, that's relative strength. Plus you have Prime Day. So that may be a catalyst to say, hey, this thing might test the top of the area of whatever it was. This red square that I have up here. Okay? I use these to tell me this is where I'm short. That's just one. It just helps me not have to just look left. So, Amazon is going up, SPY is going down. We get to this area. Now do I say, hey, this also can run through my mind. I don't see big orders on level 2. I'm seeing the tape speed up, but it's both. It's mixed orders. It's selling and buying. It's the bulls and the bears fighting at this level, like who's going to win. Especially early in the market. SPY's going down, all right? SPY pulls back, breaks this level, and I'm like, hey, I start thinking about the short, but I don't think about it enough where I'm pressing the button. I'm not confident yet. I'm not confident on it because I just don't think that the SPY is, or I just don't think Amazon was going to give me that type of like momentum. If there was momentum, it could have been to the upside. Now, what else am I looking at for this first 3, 6, 9, the first 10, 15 minutes, guys, 20 minutes? I'm looking at volume. And what do we have here? We have mediocre volume. So I already know within the first 15 minutes if Amazon is going to be like a momentum type of day to the up or downside off of Amazon Prime Day. I think it's going to have to be when the numbers come in for Amazon Prime Day is when you get the move. And I kind of didn't think about that. But this was just one stock on my list because it turned this level into support. Like there was a lot. There was just a lot going on. It was just something I was looking at. So we break it. Or again, VWAP. What's it do? It holds VWAP. It holds the 9 EMA. So I'm go out and I pull out my fibs. Now let me do this real quick because it's needed. All right. So you guys can see the full. I do this live Monday through Friday, 7:30 to 4. All we ask for is a like and a share, a subscribe, and be a comment. Communicate or not communicate, but use this to your benefit, guys. Nobody else is paying your bills. Okay, nobody's going to help you get to where you want to be in life, and we're trying to help give you a roadmap in ways that you could just maybe use the market. You have a little knowledge there, jack of all trades, and you're able to make some supplemental income on the side. Now, wherever it is that you take it, that's wherever you take it. Okay? But if you're trying to better yourself, this is why we do it, and I'm giving you guys the full lessons. And it may take a few minutes, all right? And a few minutes is worth its weight in gold compared to getting, you wherever it is that you want to be in life. All right, so Amazon. I'm pulling up the Fibonacci from yesterday's close to the high of the day, which is right here. Why do I do that? Because right now, Amazon is in an uptrend. So I'm going to measure the move from yesterday. Okay? I could measure it here. I could measure it here. I'm not doing it. I'm just measuring from the close. I'm measuring it from the close because that's where we left off at. It's what I've been taught to do. All right. Now, I also do like use Fibonacci's on 15 minutes, hourlies and stuff. But for the sake of day trading, what do we get here, guys? This is so key. Do you see this? Do you see what's going on? What do you see? All right, what do you see here, guys? You have the 38.2 Fibonacci. Okay. You have the 38.2 Fibonacci. You have VWAP. And you have the 9 EMA all right here in the same exact area. Why was I not getting short after that? That right there is a bullish setup if you've ever seen one. Now, could we did not test the initial morning candle, but this put in a base. You know, this 369, it's almost 10 minutes here. You know what? You could count this candle. That's 10 minutes just sitting here in this zone. It's letting VWAP, it's letting the 9 EMA move on up. Now, why do I also trade with pre-market off? Because depending on when the news is, or if there is no news and it's a stock that I think may have momentum, if the news hits pre-market, then I'm going to use pre-market. Why would I do that? Because that's when the stock made the move. Pre-market, there was no real move pre-market. So my VWAP and my 9 EMA are going to be a little off. Your moving averages, a lot of people don't use them for what they're really used for. There's two things with moving averages. That is price and time. The time is important because you have pre-market, especially with a few days ago or whatever have you. It's going to be a little higher or a little lower. Okay, you only want to use pre-market data if the move or news or catalyst happened at 8:30, 9:15, 9 o'clock. Then you're taking the VWAP, then you can price that in with your moving averages. All right, you can still use them. They're going to just be a little off. Like if I were to put it on, it's still going to come up right around here. Maybe it's a little lower because there's more. What it is that there's more candles that the VWAP line and 9 EMA is pricing in. It's got to price in all that time. Price and time are the two things in the market a lot of people don't talk enough about using Fibonacci stuff. So what does this 38.2 tell us? This 38.2 tells us that whoever was long from yesterday, long from the bell this morning, is taking profit, and that they're not selling the stock. They're only taking profit. All right? They're taking profit. Now, if we start getting back down here to 61.8%, okay, chances are that's a clear rejection, double top. This ain't buying no more. This is more than just buying. This is selling. So this is how you can use a Fibonacci. That's the reason for the Fibonacci, is to give you an idea of the pullbacks, of where you can buy, what you can expect for future prices to be. Like if you use a Fibonacci extension, that's future profit targets. Okay. So this is what you want. What did you have? You had all three of these line up, same area. Boom, bang. Boom, I guess. Yeah. So like you said, VWAP, look, with pre-market, VWAP and 9 EMA are all right there together. Did I have pre-market on? I can't remember. I may have, because usually I'll watch pre-market highs, pre-market lows. And another tip, okay, since we rallied off of the bell, you want to look for prior day's close, prior day's low and high. Okay, not the open so much. You don't really want to worry about the open. You can, depends on what happened and why you would use it. So if you don't know, like line charts, if you ever see line charts on CNBC where it's just a line chart is pricing in pricing in the close. That's what it does. Not pretty much, it is. It's just the close. So it'll just graph and it'll put a line to each close. And that's how you get line charts. And that's why I said this morning, it's going to be more important on how we close today than it is how we, do during the day. So, what do we have here? What did I do? I said piece of paper 175 or 128.75 we're short, which is this area right here. 128.75 we're short. I'm not short. In fact, this thing rallied up and pulled back. So what do? I pull my Fibonacci up. Okay? I'm pulling my Fibonacci up. All right? Pull my fib up. We got the fib. Okay? Now, what do? This is a 3-minute chart. You can pull up 1 minute everything. What do we also have here on the volume, guys? Because the volume is important. The volume is important. This is another thing that I watch. You have an increase. You had a decrease in the pullback off of the level. You had a decrease in volume. Okay, and then an increase. Let me show you. A decrease in volume on the pullback to VWAP 90 MA, and then you had an increase in volume off of it and through the level. That volume right here, this candle right here, would have told you that that level was holding. All right, so if we have that, we rallied. I'm not long here, I'm not long up here. What am I looking for? I'm looking for a pullback to the level to test it. What do we get? We get the pullback. What time is it? 9:54. Let's go over to the SPY. 9:54. 9:54. Uh-oh. What is the SPY doing at 9:54, guys? You just had a massive rejection off of VWAP, and it's still selling off. I have that in the back of my mind. The SPY is in a downtrend. We had this massive candle on lower volume. What did I do? I seen the 38.2 Fibonacci hold on this candle. This candle, I went long. I went long literally like right on just about on the tail of that candle at the 90 MA. It pulled down through it, but I put my order in. I market order. I didn't limit order in. I market ordered in on the push down through this 90 MA to go long. What happened? I'm sitting through this candle. So I get in, and as soon as I get in, guys, it goes up. And I thought about taking profit on that move up for some weird reason. I did not know. I'm not, I don't see this. I don't see the volume bar. Well, see, it's hard to do it now, but I'll have to record it. So I don't know what's coming. I don't know what's coming next. All I do know is we pull back to the 38.2 Fibonacci, which is the prior resistance, which is VWAP, and this should be a place to be a buyer if the stock is going to go long. This is a beautiful setup for the long, other than the fact that we got this volume bar, guys. Look at the bounce right here, this candle, okay? Look at the volume. It was garbage. Garbage, guys. Look how low that is. You should have had a bar that looked like this off of that level. At least as somewhat as high as this, if not even like half of this candle to get the thing moving. I said something's not right here. All right. I got out literally as soon as I got out, guys. It even may have been, it was right here. I swear it was either this candle or this candle. I can get the timestamps for you if you guys really need it. They were here in chat. Does that move a stock price? Okay, so he says it's only actual shares that move a stock price. What moves a stock's price is hitting the bid or the ask. So it's not the stock price. So the stock price, okay, is plotted, but you have a bid and an ask, okay? And as orders are coming through, it's a good question. I'm going to say that, it's going to be on the ask. You'll have to watch level 2. All right, it's not going to be on the bid because there's a spread. So what the shares are showing you is where orders are being filled. Okay, what orders are being executed. So whatever the price of the execution is going to show on the tape. Because what happens is, you guys, is your orders, your buys and sells, you're not actually doing it through the market. You're doing it through market makers who then in exchange, you may be going to Citadel. You may be going somewhere else. Your order is not directly going to the NASDAQ market maker unless you have unless you have a broker that will send you there. Interactive brokers, and even then, your orders, you'll have to pay commissions. Okay, so with that being said, do you have Lightspeed? Okay, if you don't have 25,000, sometimes in the wintertime they'll run Christmas specials where they'll give it to you for 10,000. All right, Lightspeed, interactive brokers. You guys got to go to these major brokerage companies that will get you, past the Citadel or, past all these companies that pay for your order. They're paying for your order, so when your order comes in, it's going through someone else and then to the market. Okay, possibly. I will actually show you guys a video of that because there's stops along the way before it gets to the market maker and gets executed. So whatever you see on the time and sales is the actual order that's getting executed. All right, and that's what runs across the screen during the day. So why did I get out of this stock? I just got this volume, guys, to the upside. This is not what you should get. This is not what you should get. All right, especially here. This candle here should at least be, up here somewhere, guys, because this is it's holding the 90 MA. You got the 38.2 Fibonacci there. You got VWAP coming up. You just broke the level on an increase in volume. The probability, because VWAP held, 90 MA held, you had an increase in volume through the break of that level. It pulls back. The SPY is pulling back. The SPY is actually in a downtrend. So then I got this big candle. I'm like, all right, so this could be a shakeout, could be something, but what do I see? It's an increase in volume. That's an increase in sell volume. I did not expect when I got this trade, I got executed beautifully, guys. I got executed beautifully. So here's the thing, and like you said, not options. Yes, it's the stocks, the stock price is based off of the order that is filled for the stock price itself. If I go to you, or you have 100 shares of Amazon, and you're saying, I'm going to sell them to you for $102.99, and I say, listen, I'll take them for $100.90. There's a 9-cent difference. If you sell them to me for $100.90, and I'm buying them at $100.90, that order is going to go in at 190 cents. You're going to see an order fill go through the screen that says 100 shares. It'll say 100. It'll have the time. It'll have the amount. And yes. So, and it'll have the date, obviously. So we'd have to go to futures for it. So the trade, guys, this should have been support. This is a beautiful setup, but it doesn't always work out. And this is why you're going to lose money sometimes, but you don't have to lose your money. You don't have to make $400 one day and lose it the next. If you're losing $400, if you're making just as much as you lose, you need to get an education. And if you're not willing to use that education once you get it, do not go to the markets. You're better off having a 50% chance in gambling. Honestly, this is not gambling. This is a probability factor of where are the orders, who is doing what. Are the buyers in control or are the sellers in control? You guys need to ask yourself that going through your trades. Who's winning right now? Who's winning? All right. This was a beautiful setup. There's nothing you can do. Sometimes you're wrong. And guys, I was fortunate enough to take profits above where I got in. I took profits right up here, guys. Like I say, I think this trade, I was a little bit red because of commissions. All right, I was a little bit red because of commissions here, guys. I was green, and for some weird reason, I thought about taking some off. And again, I have been waiting for Wednesday, for Thursday. It's not that I've been waiting and like, oh, I see a setup, I'm not going to take it. Obviously, I took two trades today. I was a little green. This AMD trade is where I was green on. Nothing. It was just, like I said, just over break. It was nothing. There's not even a base hit. I bunted and I got out, but the guy scored. You know what I mean? So it was a sacrifice bunt. This is an example of using the SPY and seeing the sell-off, and more so a lesson on you're not always going to be right, even though the chart's telling you one thing and it's setting up, the volume's there, you got support, you broke through resistance, it's made it support, and it just doesn't go your way, okay? Just doesn't go your way. So what happens? Once I seen this right here, what's not working anymore? VWAP, 9 EMA, not there, not working, not doing its job. Why? Because they're momentum-based indicators. Okay, they're momentum-based indicators. And that means that if the stock is going to trade sideways, it's not going to be useful to you. You might as well go on to something else, see where the momentum is. So what did we have? We had a stock that literally traded sideways all day. So what does this tell us for tomorrow? Again, we have CPI, so we don't know. Looks like it has more of a downside to it, but it's kind of held up here. So we'll have to see how Amazon does. It just wasn't the day. All right, it wasn't the day for it. So we'll go to AMD. We're going to go to AMD now for that lesson. It'll be a little bit quicker. And if you guys have any questions, thanks for that question, man. If you have any more questions, throw them in chat. I want to get you guys whatever it is that you want to know. So again, like, how perfect was that trade, guys? It doesn't get any more better than that. It's just that you don't know you're going to get that low of a volume to get that break back up. And what was I looking for? I was just looking for $1.50, maybe get up to this area. I got a base hit trade on, boom. I'm not looking for a home run. If it turns into a home run, okay. But I got CPI tomorrow. I got PPI Thursday. I got jobs data. I got earnings for banks. Like, there was no rush for me. I didn't know that mid caps were going to the technology mid caps were going to go off like they did. And again, the SPY, kind of the same thing in the morning. I was really surprised. Real quick, let's go over AMD. Now that we know what the SPY looked like, we could probably turn it off. We could use the Qs. But AMD, guys, this is the second time. And I said this in chat. I said, wow, guys, look what they're doing pre-market. Look at yesterday. Sell off right at that level. Boom. Take your profit. Beautiful trade, done early. I got 2 jobs now because I make all my money at 9:30 in the morning. 9:45, I'm done. That's what they've been doing with AMD for the past couple days. Again, you think it's going to hold. What do? They sell the hell out of it. They sold the hell out of it. All the way from 8:30 this morning to 10 o'clock this morning. So what did I do, guys? I took a long on AMD. Where did I take the long? Took the long right here. Got out of Amazon. Was it right there? It was right there. No, it was right here. This is where I took the long on AMD. Right here. And then I took it off. I didn't need to be in it. That's not something I should be in. I literally took it right there. I took it right there. This was not a trade I should have been in. And as soon as I got green, I took it off. All right. I was looking for the reversal. I was looking for a reversal. Now I've already went through AMD. I'm not perfect. So I went for AMD. What was I looking for though? Again, I was just looking. This wasn't even a scalp trade, but I was just looking to see if AMD would get back to pre-market lows and this area right here to retest it. And VWAP, because you have VWAP coming down. So I'm not going to be short with this huge gap between VWAP 9 EMA. Like, look at this gap, guys. Like, between VWAP, like, look at the gap you have there between the stock and your moving average. All right? So you want to look for it to revert back to it. Now, this is what people that scalp do. They'll do it on a 1 minute chart, whatever. You know, you can use it once you have time in the market. You can really scalp on not necessarily a 15-minute chart, but you can do it off of a 3 minute, 2 minute, 1 minute. You know, you want to just catch the reversals. You know, so I got long here. Why did I get long? Because I seen that we broke this level. We pulled back up to retest it, and it broke back down. Not broke back mountain. I have never even seen that movie, but it broke back down, and then right back up to it. I always tell members in chat, you want to watch when a stock comes down and makes a complete reversal back up. That's a sign, guys. It's a sign. It's a sign. So I said, okay, if this does not reject and we break back up to this level, I know that if we hold this level, I know that I can at least get it to here to get the shorts to come back in, because I'm going to have VWAP. I'm going to have this support, prior support that has not been tested and turned into resistance today yet. That'll be pre-market lows, the initial morning low, and the bull flag. You have the breakdown out of the bull flag. You'll come back to retest it and find out if it's a failed breakout or not. That was the idea behind the trade. This was not like, all right, I'm going to be long this all day or 2 days. It was just let's get a base hit trade, small. It continues to rally the rest of the day. It rallies the rest of the day, but I doubt it. Again, also, what also did I have, guys? I had the SPY. What's the SPY doing? It put in a double bottom, started to rally. So if I know if the SPY is coming into support, AMD should be coming into support. So this is how I use these two. You know, this is the overall market direction. All right. If I see a reversal in the SPY, I should start to see a reversal in AMD. And we also have an area of support down here. All right. This is an area of support. It's not a major support by all means at all. This is not something that I would take in an area I would swing trade it long. But yesterday's low, guys, that's what I tell you. Yes, the prior day's low or high and the prior day's close is what you guys want to go through. We did break it. But again, what did we do? Especially even on the 15-minute chart. You literally took it right back. You took it right back. They're still nibbling. They still buying. They're still here to buy it. They're not letting this thing like just fall out of bed. They're not letting it. All right. So I got long AMD. I got the push up. Okay. Again, my goal was to get it to retest initial morning low, the pre-market low, and VWAP. So I got 3 indicators, and I can also pull up my Fibonacci, and you'll have the 38.2 Fibonacci there as well. Okay. You have the 38.2 Fibonacci there. All right. So let's do it. Let's throw up the fib. Abby. Well, would you looky there? All right. Would you look there? I had the 38.2 Fibonacci. 38.2 Fibonacci with support. Let's see if we can turn it into resistance. And I got VWAP there. I got 1, 2. If you can't see this, 1, 2, 3, 4 indicators lining up right there that says I should be able to get a bounce back to that to reject it. I can go long. I could see what it does, take the profit once it gets there, and then go short. And what else did I have? I had an increase in buying. So I got long. As we broke the level, we pulled back into the level, I got long. Boom. And then right around here, I took it off here because I was actually telling myself, I explained it. I did this all real time. And I'm like, I shouldn't be in this trade. Like, what am I going to get out of it? Like, I'm like, okay, I have the idea, I have the thesis, but I don't know if it's going to pay. So it gave me a green trade. It paid for the commissions that I paid for with Amazon, and I was also green on it. So, that's just the way. That's just a scalp. You could use this for a scalping mentality. You want to be able to like know when there's going to be a reversal. I had the candle that immediately reversed, and it just about took back the whole candle. And in fact, it did with this one because it continued up right back to the level. The amount of time had worked it, and I'm like, it's going right back to test it, and it's probably going to break it. And then once it breaks, and also, what else am I thinking, guys? You also have to think about people that are short this stock. If this is not going to go down any farther, what are they doing? They have to buy back they have to cover their position. They have to buy the stock back. So if us longs know, hey, they just got a nice 2-3% move to the downside, all right, and this candle just reversed this break, because what you had here, okay, when you're trading, you want to look at it as both ways, as a long side and a short side. What are the shorts doing? What are the longs doing? You had a perfect break through the level. It pulled back up, turned the level into resistance, and sold off hard. But you didn't have the increase in volume. The very next 3-minute candle, what happened? It reversed it right back to the level. Okay? Shorts are probably hanging on. They're like, oh, this is just a shakeout. We broke the level. We didn't even like sit here, try to go back down. Nope, we just went straight back up. Because what do you have here? All right, what do we also have? What you guys probably aren't seeing. Let me get rid of this circle. All right, you have a perfect bear flag here, guys. A perfect bear flag right there. I would do it right there. All right, that is a perfect bear flag. So when you break out of the flag, you always come back to test it. You always come back to test the flag. So with that being said, there's your bear flag right there. That's your bear flag. I can make it bigger if you can't see it. All right, see the breakdown? You'll usually have it break down, retest it, and then boom. If it breaks down, it comes back up and fails to break back down. It comes down, comes up, and it goes higher and pulls back, and bang, that's a failed break. That's a failed breakdown, and we can sense it. It broke down. I was looking to also test it, and where did it just about find support? Right at the bear flag, or found resistance right at the bear flag. Didn't even really care about VWAP. So that was another reason why I said, hey, let me see if I can just take a quick long here just to get like 50 cents, $1. And, it turned out to be a good trade. 110, to 112. My target was like 111. It was like 112. Because I also wanted to see if we could possibly even get back to the high of the day. But I was aiming for VWAP. That was my goal, was the bear flag and VWAP. Let me see if I can get back to VWAP. This candle is what gave me the, it gave me the actual confidence. That reversal candle right there gave me the confidence, along with this little candle here that it kept going. It kept going to the level. It didn't just, after this candle closed and then kind of went back. It kept going. Once this candle opened after a 3-minute mark, it just kept going into the level. I said, okay, all right, bet. And we broke it. We literally broke it. We didn't just sit here and debated, are we going to break the level or are we not going to break the level? Nope, we broke it. We just reversed, boom, broke through the level. That's bullish. All right, where are we going? Where's our target? Our target is going to be 111.23 because that's the bear flag. That's the 38.2 Fibonacci. That's where VWAP's going to be. So there is a test to revert back to the mean to test VWAP. And I was looking for $1, $1.50. All right, start thinking about these things when you're trading. When you want to go short, if you want to go long, think about what the long person's saying if you're short. Think about the person who's short if you want to go long. Okay, are they going to look at this and kind of do the same thing? Was there something I was missing with Amazon? No, there wasn't. I took it off because I felt it wasn't going to work, and it didn't work. So I was right by saying I'm not going to give this time to break my level because I instinctively feel that this level is going to get broken. The Amazon was not going to hold up. And fortunately, I was right. I was even green on the trade, but then commissions, So sometimes it's like that, guys. And it was a beautiful setup, And if you're not experienced, you may not have been able to feel those senses, and not be able to. It's one thing to do trading, but being able to read and analyze all these things in real time. You need to be able to do this in real time, and over time, you'll be able to do it. If you're new, it's not, it takes time. It'll come. You have to put in the work first, and then it will come. Because again, you don't know what's going to come next. You do. I mean, I have an idea. I'm always saying in chat, we're live Monday through Friday, 7:30 to 4. I'm always saying, guys, I think we're going higher. I think this is the reversal. And I am right more times than I am wrong. I'll put it to you that way. I go through my trades live. I call them out. And I also talk myself through the trade so you can see what is it that I'm doing that maybe you could use or don't use. Maybe you see something I don't. You comment in chat like, hey guys, hey, watch for this or something. I'm like, oh shoot, I appreciate you. Because I'm trying to analyze everything. I'm only one person. I want to get on stocks that have momentum. I don't want to sit in stocks that are just going to give me a dollar move. I want momentum. And if we had some people in here, we could have known, hey, mid caps are popping off. So let's do one thing. It's getting kind of late. It's already 10 o'clock. You got to be kidding me. I got to go, guys. Tomorrow morning, come join us 7:30 to 4, guys. Tomorrow's CPI. Tomorrow's going to be huge. I can't believe it's this late already. I didn't even get into a lot of stuff I wanted to get into. We talked about inflation. I got roadblocks on my radar. Not for maybe tomorrow. Maybe we see a day 2 continuation. But more of a swing trade. We're going to go through the data in real time. We're going to give you guys our thoughts, our analysis, the stocks that we're watching for the day. There could be news on individual stocks. I'm sure there will be. There'll be upgrades. There'll be downgrades. We're going to cover them. We're going to put ourselves in the best position possible to make money, to take advantage of this market. Tomorrow's going to be volatile. Let's get our sleep. Get your sleep, guys. Let's come in tomorrow and let's kill it. We're going to kill it. Even if the market doesn't decide to move, there's going to be something moving. I assure you that. Please, or not please, but guys, hit the like, share this if you could, subscribe. I'm trying to get to 100 subscribers. That's my goal. Thank you guys if you guys found this information valuable. Before I go, is there any stock you guys want me to throw up to go over? You guys want my insight on anything? We called out Boeing also before it made the move and had no idea it was going to have news. But I am not lying when I said this. It's all recorded. I literally said right around the low of Boeing, when I looked at the chart, it was down here. It was in the morning. I looked at the chart to see what the Dow was doing. I was kind of just going through stocks. And I think I was probably on a 15, 20 minute chart, or not 15, 20 minute chart, an hourly or 15 minute. And I'm like, hey, why is this thing I was like, this stock should be breaking out. Because it had the pennant, it broke out of the pennant, came back down and tested it. Remember the AMD trade I just told you guys about? It even does it on longer term stuff, guys. Look at this. Look at the pennant, and it breaks out. And what's it do? It pulls back to turn this into support. And then the rally starts, and that's why I said at 9:40, at 10:30 or so, I was like, guys, Boeing looks like it's about to take off. Because I didn't see this. All right? I didn't see that. What did I see, though? I did see, come on, man. This is why I don't, some things about Thinkorswim that I don't like. All right, it was right there. I didn't even have this green candle, though. Guys, once it held this level, look, it broke down, held support from the pennant, which I could just extend this line there, and it'll hit it. All right. Look. Boom. And it's even, you can tell, see? You can tell, look, a low and then a new low, and then that's when it starts. So that you can tell there that it's on institutional computers. So resistance, it breaks up, kind of does like a little failed break, which is a shakeout, and comes right back up to that level. This level right here is a magnet. Support, resistance, drops, tests the pennant, rallies its ass off. Right after it tests the pennant, it just shoots for the moon. 3-day rally to that level. So that's how you can get confirmation that these pennants and stuff that you see are there. Because once it tests it, or if it gets like a high volume breakout, then you'll know, hey, this trend line is on some other desk in Chicago, New York, California, wherever. All right. So we start holding here, guys. And I'm like, why is Boeing not breaking out? I literally said that. I'm like, Boeing looks bullish as all hell. Why is it not breaking out? And then literally 10 minutes later, I walked outside and came back and I said, guys, look at Boeing. It's breaking out. News came out, and then literally you got this candle. I shit you not. You got, it was up a lot, but I mean, this move felt like more than 3%. But maybe that's just, because it's Boeing. You literally got boom, bull flag, boom. You can use, again, if you guys don't know, real quick, measure your moves. We say it all the time, measure your moves. Why do we say that? Because even if you didn't get in there, you could have got that and bought the dip. If you would have bought the dip, okay, really, so the break, the retest of the level, let's put the line there. What do you have? It's probably our next target that'll go to like 21 or so. 20. 1961. But still, in all, the move started right here, really, but still, it'll give you your profit targets, and it's pretty much up here. It'll just, it is Boeing, so it's not going to be like some of the other ones, but if you start measuring your moves, you'll say, hey, you just take this rally, it pulls back, you take it, you move it to the pullback, and then you'll say, all right, I know I can get at least, I should be able to get this much. All right. I love y'all. You guys have a great night. Join us tomorrow morning live, 7:30. Guys, get ready. All right. It's all fun and games until the big boys show up to town. It's going to be game time tomorrow. I promise you. You better have your head on a swivel. You got Fed talking. You're going to have to read and react. The market is going to move, and it will leave you in the dust. Or you'll overposition yourself and not be able to stay in the trade throughout the whole time. Or you will get caught on the wrong side of the trade, and you'll be overpositioned, and it'll flush without you. This is going to be for you, whoever these two people are, whoever's on this live stream, even if you see it after we're done, guys, this is the best thing somebody could ever tell you, and you're going to thank me later in life for it. Especially on Fed days like where you get high volatility. You don't have to position yourself like a normal trading day. You can dwindle it down and still make crazy gains, because the market's going to move and it's going to start price. It's just going to get crazy, guys. Dwindle your positions down so you can stay in the trade. You get your move. You take the profit. Take it. And if you're buying 5, 10, 20, 50 contracts, you get to the first one, take it off. You get the move, take it off, put some in your pocket. You get an extension, take half off. Like, there's ways to do this. Taking off in tiers or in sections, in areas that it gets to your targets, even if it's not getting to your target, but it's going in that direction to your target, and you take some off, that's risk management as well. Not just leaving the whole thing on. All right, so dwindle your risk tomorrow, because it's going to help you stay in trades. Now, if we start getting a direction, you're going to know. You'll be able to use the 9 EMA, all right, because they're trend moving average. If we get a rally and a pullback and the 9 EMA holds, and you start to see an increase in volume on that, okay, we're rallying. The 9 EMA is our, it breaks the 9 EMA, that's our sell point. It was our buy point, it'll be our sell point. All right, I'm going to show you guys this stuff live tomorrow, 7:30, guys. Get some sleep. Tomorrow's the day. You guys have any questions, just throw them at me in the morning. We're going to cover the data. We're going to cover the trades we're looking at. We're going to also give you guys some help on your mind, psychologically, all right? If you're watching stocks, let's, if there's something you see, help me. I'm only one person. I can only see so many things. If you guys are looking at stocks, throw them in the chat. Help me out. We can eat together. I don't have no problem throwing you a steak or something, You feed me, I feed you. That's how this world works, Appreciate you guys for being here tonight. Tomorrow's going to be a huge day. I hope to see you guys there. If you could, hit the like. If you already, I know you guys have, and I greatly appreciate it. Again, if you know somebody that might be interested in the markets or want to get an education, send them our way. We'll be glad to help. It'll be nice to have them here in chat. But that's all I got for you guys. You guys have a great night. I'll see you tomorrow. Thank you guys for the likes, the subscribes, the shares. We're trying to get to 100 subscribers. We'll see you in the morning.